Hi stock investors, JJ here. Welcome back. Well, today we're going to have a look at what Mohnish Pabrai says about focusing on what's hated and unloved, where that big money is made in investing by focusing on that. That's what he says. Let's see what he means by that. He does explain it, so let's get into it.
Yeah, I think a good way to look at it is try to focus on what is hated and unloved. Hated and unloved is a good way to start. I made a trip to Istanbul, my first trip to Istanbul in 2018. I was just in Istanbul before coming to London. I made that trip just because I was just looking at numbers, and Turkey was just, screening super cheap. And of course, it had a lot of issues. It had, runaway inflation, still does, runaway inflation, crazy monetary policies, currency getting decimated, all recipes for great disasters. But I said, the bluefish in the Bosphorus is very good. And so why don't we make a trip to Turkey and just see what's happening? And I had a friend, diehard Ben Graham disciple, nice guy. And I said, hey, if I came to Istanbul, could we visit the businesses in your portfolio? He said, oh, it'd be so much fun. And I said, look, here's the rules. Number one, don't take me to any company that you don't have an investment in. And number two, let's start with the one that's your idea number one, and then idea number two, and we just go down the list. And he said, yeah, sure. So I started to look into Turkey, and I found that a lot of it was correctly beaten down because it deserved to be beaten down. But there were some babies thrown out of the bathwater. We just need a couple of babies. We don't need too much, one or two. And that's all we're looking for. We're looking for just some anomalies, And Turkey had a few that, because no one was interested, no one wanted to be there. You had some really, really high quality businesses like Coke bottlers and dominant beer brands and things like that. And a lot of the footprint of these companies that were listed in Istanbul, the revenues were coming outside of Turkey. So they were being punished just because they were listed there. And so we said, okay, we can do that.
In terms of focusing on what's hated and unloved, first of all, Turkey. Now, this is a country that many investors just don't want to look at. And he said that way out of a lot of people's circle of competence for sure. Of course, he has the benefit of being able to go there. He said he had a friend there who was able to show him around, already had investments there. It reminds me of Nick Sleep when he invested in Zimbabwe when that country was in great trouble there. There was a lot of political turmoil, economic turmoil, high inflation. And I do think that's where Mohnish Pabrai got the idea for this, to look at countries like this, at businesses like this. He talks about Coke bottlers there all around the world. They're known to be good businesses. He's talked about this before, Charlie Munger and Warren Buffett talking about that. So he gravitated towards those. And we will have a look at some of the companies that he has invested in Turkey. So he looked at for the good quality ones that would get through the tough times, hated and unloved.
There is no strategic plan that one can come up with. I think one needs to kind of read newspapers and, keep your eyes and ears open, look at Value Line or whatever is the equivalent in the UK, and look at what things are kind of in an area where not too many people are paying attention or people hate it and that sort of thing. And that's generally going to be areas where there could be possibilities of something. And we don't need a whole lot, if we can find one of those in a year, we're doing well.
Even within the US or in Europe or wherever you are, there'll be areas that are hated and unloved. As my Patreon members know, I've focused on a certain sector in the US that's kind of hated and unloved. It's got a bit of a stigma. It was in deep value territory as I saw it, but possible catalysts coming, and that's the MJ sector. This platform probably won't like me talking about it too much. This is how much it's hated and unloved, but it is legalizing. There's political things happening, and so I focused on small companies in that sector. That's one place that is hated and unloved that I've been looking at as a value investor. There are other sectors like that. Mohnish Pabrai talks about coal, and he does have coal investments. We'll have a look at that, and that's in the US, and automotive as well, not the EV companies, the glamour companies, but diving deeper into that industry. He's found things that are cheap in that industry too. So he does practice what he preached, not just in areas of the world that a lot of people wouldn't be interested in. Diving deep, that's often what value investors do, into certain sectors that other people aren't looking at. There aren't a lot of eyes on it, perhaps not many institutionalized, not many analysts. Now, if you're getting value out of this video so far, please remember to hit that like button if you're watching on YouTube to help the algorithm to spread it to more people. And do subscribe to the channel if you aren't already to get more of this kind of content in the future.
Today, I think Charlie and Warren always complain that the brain power that is focused on, public equities and all of that is very significant. I mean, we have more mutual funds than stocks in the US, probably similar in the UK. And we have more hedge funds than stocks. And so the thing is that, and we have more analysts than stocks by some factor, maybe 3 to 1 or 4 to 1 or something. So a lot of stuff is picked over. I found last few years, it's quite difficult to find stuff. And, when I look at my portfolio currently, it's the most weird portfolio you can think of. I manage about $1 billion. It's about 600 million in Turkey in 3 names, another 300 million in coal in 3 or 4 names, and a few other things which don't matter that much. And I would have never guessed that'd be kind of, that way.
Okay, let's have a look at Mohnish Pabrai's portfolio, or rather 2 portfolios, because he does have a mutual fund now, the Wagons Fund. And so what he was talking about here, the top holding here is Turkish, and it's 41.18% in the Pabrai Investment Fund's portfolio. But we can see Races here, which has done very well. It's a warehouse owner in Turkey, as I understand it. But we can see here coal, and that's financial services there in India, another coal company in the US, another coal company in the US, another coal company. So he's gone deeply into coal, which, as he said, it's a weird portfolio. Unloved and hated coal, a 4-letter word he's talked about, something I wouldn't invest in myself. But he doesn't mind going heavily into coal. And this one's a realty, I would think, in India as well. So that's down below 5% there. But these top heavy there, mostly these unloved and hated in Turkey and coal companies. So that's what he means by that. And that's where he says the big money is, big returns. Now I want to tell you about this special offer I have from ShareSite, which I use myself. I wouldn't recommend anything that I don't use myself. If you go to the link in the description here, you'll see the special offer for my viewers, my community. You can also sign up for free. That's not the premium version. You get much more in the premium version. What is ShareSite? It is a portfolio tracking and reporting tool. So you can bring all your investments into one place and visualize how your performance is going, your true performance of your portfolio. It helps with tax reporting too. There's a video, a short video on this landing page if you want to go there and see the offer and see what ShareSite does. If you don't know, as I said, I use it myself. I highly recommend it. And I'll leave a link in the description to that if you want to take up that offer. I can't promise that that offer will be there for very long, so go and check that out now. Now, this is his relatively new mutual funds portfolio, and as we can see, quite similar companies here. We've got in Turkey Airport Holdings, which it covers the region with airport developer there, and these drinks and beverage companies. There's the Coke bottler here in Turkey. So these are, as I said, been known to do very well around the world. So he's betting that will do well. So 10% and 12%, and then the coal companies and the automotive. When we get down to number 9, it's only 4% of the portfolio. And again, the oil companies, another one that Warren Buffett has been into, Occidental Petroleum. Berkshire Hathaway's bought a lot of that stock, perhaps a clone from Warren Buffett there, but again, relatively unloved and hated industry there. So a lot of investors wouldn't be keen to look in these areas, but he is, because he thinks the market will reflect their true value. Even though there's a trend away from these companies, he thinks there's still, obviously, because he said so, there's a lot of cash flow still in these companies for years to come.
Our job is to look for anomalies. And our job as investors is to look for things that make no sense. It's when things make no sense that's when there's some opportunity. So on a steady state basis, I think that markets are mostly efficient. If you have a business like Coca-Cola and they sell syrup to bottlers and they've got a dominant brand all over the world, it's unlikely that a business like that would trade for 1 times earnings most of the time. And it's unlikely it would even trade for 10 times earnings. And sometimes things get euphoric and it may trade for 40, 50 times earnings like it did in like 99, 2000. And sometimes things get kind of pessimistic, like I think in the early 70s and until the early 80s, where it's trading at 7 times earnings or such. So it vacillates. And so when a business like that gets to the low end extreme of being very undervalued, then that's interesting. And because there are 50,000 stocks, I don't like to quote Jim Cramer too much, but he says there's always a bull market somewhere. And I think he's right in a way that it's not possible that in a global market of 50,000 or so traded equities that everything is perfectly priced. It's the nature of markets that they're going to undershoot and overshoot. And in fact, if you just throw darts on all the businesses in the London Stock Exchange or the New York Stock Exchange, any random company that the dart hits, you look at the 52-week range on that stock, it's going to be like 60 to 100 or like 75 to 125 or 75 to 150. And it's not possible for most businesses that there's that much value change happening in a single year. The Coke business doesn't change that much in a year. But the stock price, because it's auction-driven markets, the nature of auction-driven markets is that the mechanism by which prices get set can have a deviation from underlying fundamentals. And so that's what allows us to actually make a living.
So as a fund manager, that's what allows all value investors to make a living, going for good quality and underpriced companies he's talking about there. A lot of traditional value investors don't need the company to be a quality company because you can still make money on a fair company, which Warren Buffett did early on. As long as it's really low priced and then the market recognizes that it's better than it is, it can go back up. But he mentioned Coca-Cola a lot there. And of course, we saw in his portfolio that he has a Coca-Cola bottler in Turkey. So that unloved market, but a good business. And he also mentioned how, it can get overpriced. He mentioned when Coca-Cola was trading very highly in the late 90s during the internet bubble. It wasn't just an internet bubble. There were other companies like Coca-Cola also trading very richly. And Warren Buffett has said, there's a video on YouTube of him saying he kind of regrets not selling at least some of Coca-Cola back then when it was priced so highly. So he wants to own things long term, but when they get egregiously priced, that's when he thinks it's good to sell. And we have seen lately, I made a video about that. I'll put a link in the description about him selling down half of his Apple stake. And there's some conjecture, some debate about why he sold that. He hasn't told us yet. Was it that it was just the weighting was too much in his portfolio, or was it too highly priced? We'll have to wait and see if he talks about it later on. But generally, Mohnish Pabrai saying here you can take advantage of anomalies where things are way underpriced. Now, talking of weird portfolios with unloved and hated things in them, I have talked about my portfolio of small and mid-cap stocks, mostly over at the Art of Value Patreon. If you want to check that out, I'll put a link in the description. I talk about those sometimes in the weekly investing updates. It's not investment advice. I don't recommend stocks. You have to do your own analysis work. And with that in mind, I do have these stock analysis secret sauce modules that I'm doing. I've done 6 so far, doing them regularly over there. Learn how to do stock analysis and search for these anomalies in the stock market. On this weekly investing update, I do share things over there that I don't share anywhere else. I think it's well worth the $5 a month. You could just binge watch it for a month if you really want to, but do go and check that out. Now on the screen, I'm going to put a link to a video that YouTube wants you to watch next. The algorithm is pretty good at choosing if you're watching on YouTube, and hi to people on Spotify. Thanks to everybody for watching. Thanks for your company today, and I'll see you in the next one.